Elon Musk is yet again on another mission about Twitter's future and his ambition to make it valued at over $250 billion. He presented his staff with an idea of how big his goals are last week, informing them that he sees Twitter being valued more than 10 times its present value of around $20 billion. Will those goals affect Twitter users more than now, as the company's already seeing a steep devaluation after Elon Musk's takeover? Or is it going to be something high-yielding towards a better future for Twitter? Let's find out. Based on an email sent to the company's workers on Friday, Elon Musk stated that Twitter is now valued at about $20 billion, a substantial decrease from the $44 billion he paid to acquire the platform in October 2022. The email was sent to workers to promote an innovative stock compensation scheme, according to the New York Times. In the email, Musk cautioned employees that Twitter was still in a state of financial crisis and was only 4 months away from running out of cash. But how? Musk stated that the business needed slight changes, such as widespread job cuts and cost reduction, to escape bankruptcy and simplify operations. In a statement, he said that Twitter has been changing rapidly, mentioning that the business could be considered an inverse startup. He recently told workers that he wants the website to be a financial center where users can transfer money to one another and earn income on savings via an app. Twitter's worth has fallen as Musk has significantly restructured the business. He turned Twitter private in October 2022, meaning it doesn't need to provide any financial disclosure now. However, the billionaire has openly stated that the business lost income as marketers left the platform following his takeover, and that Twitter was on the verge of collapse. The $20 billion valuation places Twitter slightly bigger than Snap, Snapchat's parent company, which has lately battled a commercial slowdown and projected a drop in income. Snap, which has an estimated market value of around $18 billion, encompasses about 375 million daily active users, compared to 237.8 million in Twitter's final public reports before going private. Last week, he attempted to reassure surviving employees that they would profit significantly from the company's success by launching a staff stock plan valued at around $20 billion. He also stated that he sees it clear but also difficult to be valued at more than $250 billion at some point in the future. This figure relates to banking titans such as JP Morgan Chase & Co., which has an estimated value of around $380 billion, and Bank of America Corporation, which has a marketplace valuation of nearly $230 billion. PayPal Holdings Incorporated, which is not strictly a bank, is worth approximately $85 billion. However, Musk did not reply to the requests for comments, and an email was sent to Twitter's communication staff. A source already reported the company's latest value. Based on Musk's message about the new stock pay program, Twitter's workers will get equity in X Corporation, the holding firm Musk utilized to purchase the business. These rewards will be made by the $20 billion value. Musk also stated in the conversation that he believes Twitter will be worth $250 billion eventually. But how is Elon Musk going to make Twitter worth $250 billion? Now, the Twitter CEO, aged 51, is imagining a world in which people who use Twitter can easily transfer money to one another, making interest on savings and doing various other things via an app. That online goal corresponds to his initial vision for X.com before he combined with another similarly concentrated firm to become PayPal. He stated that having the social media business at the center of users' financial affairs is critical to his endeavor. The initial success of the digital payments business provided Musk with affluence. He then invested in Tesla Inc., an automobile company, and SpaceX, one of the largest space companies in the world. In a conference with Morgan Stanley back in March, Elon Musk assured that it's really possible to become one of the biggest financial institutions in the world. He discussed his plans to broaden Twitter after updating its failing ad business, which has typically contributed to roughly 90% of its revenue. According to analysts, Twitter's income could skyrocket as a payment mechanism. Musk also stated that Twitter's earnings are better to the point where the social networking site could return to positive revenue growth next quarter, as the CEO tries to reduce costs, entice ads back, and manage the platform's technological issues. However, as with Musk's previous encounters in automobile and aerospace, his ambitions deal with significant obstacles, including established competitors and legislative barriers. While speaking at the Morgan Stanley conference, Musk said that the income of the business he purchased for $44 billion last year would fall even in the following year and could even turn positive. He estimated Twitter's annual expenses to be around $3 billion, including $1.5 billion in interest charges on the $13 billion in debt he used to make the purchase, down from the $4.5 billion he calculated the business would have otherwise spent in 2023. He did admit a major decrease in advertising as a result of his intentions of loosening content filtering. Twitter earned $5.1 billion in revenue in 2021, the most recent finished year for which figures were available. Twitter produced net cash of $126 million in the first period of 2022, which fell to $30 million in the second year when it filed its most recent financial data as a publicly traded business. Musk has directed dramatic cost-cutting measures to bring Twitter's resources under command, including several rounds of layoffs. Nonetheless, the transition to a smaller organization has resulted in internal instability and recurring technological problems for users. According to a report by the Republican-led House Justice Committee, the FTC has previously requested Twitter to pass over internal emails related to Elon Musk since the purchase, as well as information about its new paid membership service, Twitter Blue. Authorities are additionally raising their auditing of the company's capacity to adhere to social media regulations. In an extensive discussion with Morgan Stanley, Musk claimed to have cut cloud expenditure by 40% and reduced Twitter's servers count from 3 to 2 to improve the company's finances. Meanwhile, according to a corporate presentation, Twitter's monetizable daily active users have climbed to 253 million, the highest level ever. He went on to say that some companies had come back to the platform and that he now intended to enhance the usefulness of marketing by enabling marketers to target users based on keywords and interests. Twitter was poorly monetized, he said, earning 5 to 6 cents per hour per subscriber and hoping to increase this to a minimum of 15 cents per hour. He further said that the revenue that is to be produced from Twitter is huge. He stated that he still intended to add purchases to the platform in the future, and that he thought it was likely to become the largest financial institution in the world simply by offering people easy payment choices. Motivating employees with the prospect of a large payout is a strategy Musk has used at his other businesses. In 2015, for example, he elicited a collective gasp from Wall Street when he predicted Tesla, then estimated to be roughly $25 billion, would be worth $700 billion in 10 years. Tesla eclipsed that $700 billion estimate in 2021, becoming the first automobile company to be valued at more than $1 trillion. Its value has since dropped to around $620 billion. Musk plans to rely on enormous expansion at Twitter, as he did at Tesla, and has laid out a strategy for pushing Twitter beyond its main advertising business. This is at the core of his claim for a greater value. Michael Grimm's views on Elon Musk and his strategy. During the conversation with Morgan Stanley's head of technology investing banking, Grimes, who led the initial offering of shares of Uber and Facebook, told Musk that the media had created an unjust narrative about his management of the platform, and that the worth is clear with regards to the modifications Elon Musk made on Twitter. Morgan Stanley contributed the most money, approximately $3.5 billion. The banks, which include Barclays and Bank of America, are facing possibly significant losses on the debts because they've been unwilling to set the debt to buyers due to uncertainty surrounding Musk's plan to make Twitter profitable and increasing interest rate demand. Well, let's see if Elon Musk will be able to bring Twitter to a value of $250 billion, or will things become even worse? What do you think? Let me know in the comments below. Don't forget to like and subscribe and press the bell icon so you never miss out on future uploads. Thanks for watching, I'll see you in the next video.